Hello, welcome to the latest episode of FUMO, Future Money, brought to you by CFTE, our producers, and sponsored by XVC Tech, and supported by our ecosystem partner, the MENA FinTech Association. Our guest today, zooming in from Hugo, you're in Slovenia,
Yep, in Ljubljana.
in Ljubljana, is the founder of Flare Networks, Hugo. Hugo, welcome to the show.
Thank you for having me, Ronit.
We're going to be talking over the next 40 minutes or so around the topics of machine learning and artificial intelligence, blockchains, DLTs, decentralized data, and more. Hugo, I had the privilege a couple of times in the last month, 2 months of sitting down with you at great length discussing how you got into the space of emerging technologies and the future of finance. And you started out, you were into machine learning before it was kind of AI was cool, right?
I don't know. I think it's always been cool. It hasn't always been possible, or possible to possible to the extent with which we would, like it to be. So I think AI has been through a couple of hype cycles, and looks like this last one is ending up with a consumer product. But the reality is, we all use AI
hmm
all of the time anyway. So I think more machine learning is kind of where I went.
Tell the audience a little bit more about how you got into machine learning. What was the kind of journey, the path from North London to machine learning? Was it a straight line?
Not quite. I mean, I was a commodity trader at a couple of large hedge funds in London, within their macro groups. Ended up running, reasonable amount of money, but decided that wasn't really where I wanted to be in life. I found it, I suppose, a little bit soul destroying, and wanted to do something that probably had a higher return on investment for what I consider, the investment. So sort of went back to university, went to UCL to study machine learning, and I mean, I'm no great machine learning, you know, expert. I have like a fair knowledge of it, but I'm certainly not like, the people that are building things like, you know, Chat GPT today.
Hmm.
So have a fair knowledge, and but much more importantly, my co-founders, the people we started Flare with, and Flare's a blockchain business at this point in time. They're, one of them, our chief scientific officer, is an extreme machine learning expert. So,
Hmm.
keep my interest up that way.
Got it, got it, got it. A couple of things there I want to double click on. One was you're quite successful at a young age in trading. I think you said commodity trading. Why was it soul destroying? Why did you not want to? I mean, it's an easy way, not an easy way. It's a hard way to make money at a young age. What's wrong with that?
There's nothing wrong with it. Just didn't find it to be naturally suited for the things that I was fundamentally interested in. I'm interested in the macro world. I'm less interested in it to try and extract, I guess, alpha from it. I found that process a little soul destroying. Commodities is also a little further away from pure macro. It's very, very dependent on, like, specific markets, specific aspects. Although it's obviously one of the largest feed-ins for macro. It's a great shock.
Mm.
It's a fantastic shock mechanism for macro markets. So worth having within a macro portfolio. But I just didn't want to be only as good as my last trade,
Mm.
for the rest of my life. I really wanted to be involved in building something over the long term that I thought, left uh, some lasting value, and that's kind of my desire in life.
And when you decided I want to do something different, I want to build something, you go back to college and you start exploring machine learning. What drew you to that field? I know you said very humbly that you're not a machine learning genius or expert. There are people who you work with who maybe, but you're not. But you were drawn to this area. What drew you to this area?
Fundamentally, it looks like it looks and looked at the time like the future. So it's an interesting place to be. Secondly, I guess my background in sort of financial engineering, having a heavy reliance on statistics and linear algebra, is probably, there's a lot of crossover skill set there. So that's fundamentally why.
And in wonderfully English style, non-Dubai style. You're very humble, and you sort of play down your expertise. I mentioned Dubai as we've met and spoken several times in Dubai where we're both partially based. You're and we've discussed this in person. You and your team are unusual. You built this blockchain network, Flare. We're going to get to Flare now, but you're a very unusual team in that most of these teams tend to be out of the US or Asia. And there might be multiple nationalities, often very disparate nationalities, sometimes from Eastern Europe, but you're a largely British origin team. Talk me a little bit through that, how that makes that background might make it somewhat different in terms of your journey and experience in blockchain. Then we'll go into Flare in a bit more detail.
I think we started the in the UK, but actually, I suppose myself, yes, I'm a British passport holder.
Mm.
My two co-founders, one is Irish, one is British, but of Armenian, largely Armenian descent.
The Irish are going to kill me
Um,
there by calling you a British team. Damn. Yeah, I'm done. Can we
but
edit this out? Just kidding.
yeah. We can do if you wish, but I think we did start in the UK, but we
Yeah.
we found very quickly that the environment in the UK for startups was
Mm,
very, very, very suboptimal. I don't think we really raised, other than our initial kind of friends and family seed round, we didn't really
mm,
raise any of the capital that we ended up raising through the UK, predominantly Asian and American,
mm,
institutional investors. So that was, a very different we started in the UK, but it was massively, adverse for us to do so. We would have been much better off starting in, the West Coast or the East Coast of the US.
yeah.
But we managed to struggle through so far, and it's gone fairly well. I think probably one of the um, moderate UK success stories, in terms of in our space. I think,
Mm,
but sadly for the UK, we've pretty much exited the UK
mm,
a long time ago. At this point, all of the
right.
people that everyone that was there. Fundamentally, the UK is just poor from a startup perspective, and from a regulatory perspective in terms of understanding what the tax liabilities are on a totally new type of I guess business where it doesn't have sales, it doesn't have those kind of things. It doesn't really have revenue. It just has this huge capital balance that comes into existence one day. The UK was fundamentally unable to give us an answer on that, so we relocated the business outside of the UK. Very very early on.
And maybe just sort of double click on that. The UK, do you think it's because you're in the blockchain space or in a emerging or novel technology, the UK is not a good place for in your experience, or would it also applied in other sort of startup areas? Is it something specific to do with blockchain? Just because we hear a lot of PR. I'm doing this recording. I'm in London for a few days, and when you're in the UK, you hear a lot about London as a tech center in general, or the Golden Triangle, London, Cambridge, Oxford, and the sort of surrounding area, the tech center. And there's an amazing amount of talent, and there's an amazing amount of knowledge, working talent, and your original team is a testament to that, including some of your co-founders and yourself. So that's there. That's a great asset the UK has. But you referenced the lack of the ability to raise capital and uncertainty around tax and regs. Do you think that's blockchain specific, or would that have applied to other areas?
I don't know because I haven't done a startup in other areas. I would say the cost of employment in the UK relative to other places is fairly high.
Right.
So I think that would be a barrier also. The amount of money you have to spend on, national insurance contributions and those kind of things are
Mm,
very high. And generally, also you're paying very high salaries in the UK. We now have a team of almost 100 people, of which a good chunk are here in Slovenia. A very good chunk, probably close to
mm,
40%. And then the rest are distributed around the world. But the UK just makes it very hard to, I suppose, get off the ground, especially
mm,
when you're, bootstrapping with very little money. And that combined with a sort of not fantastic VC environment, especially in a not fantastic VC environment in crypto,
mm.
um, that doesn't bode well for a startup trying, in crypto, trying to get off the ground. It just makes it harder, and therefore decreases your probability of success when it's already low enough. So as an entrepreneur, we look to go elsewhere in order to achieve, in order to improve our odds of success.
Mm. And in your case, you've got a lot of people in Slovenia. Is that just chance and circumstance?
To a
You have
large
agents?
extent,
Yeah. Yeah.
chance. We were approached by an entity that happened to have an awful lot of engineers and wanted
Mm.
to, you know, uh, uh, be part of Flare. So
Yeah.
we made a deal with them, and so that's kind of like the core rump, part of the core rump of our team. But then we have researchers from, the US, Romania, Lithuania, Latvia, places like that. We've had a
Mm.
number of employees in Israel. In this business, in order to find the skill sets and you need, you end up employing people all over the world.
Yeah. Yeah. No, in that sense, the vision of Web3, or let's just call it blockchain, that kind of vision of decentralization, actually, when it comes to talent, has really played out. I mean, we can argue how decentralized some of these networks are, but there are very few young emerging industries or sectors that I've come across where there's genuinely such a dispersion and connectivity between these dispersed pools of talent. I don't think I've seen most times, you know, fintech or Web2, you have a group of people working in a part of London or a part of wherever.
Mm-hmm.
It's highly concentrated. However much you have nomads and working from home or working from wherever, working from Dubai or Bali or Lisbon, or whereas your experience and so many other blockchains I've come across, it's a truly, truly uh, global industry. Now let's zoom in. Let's go deep into Flare for a few minutes. You and your founders set this up. Tell us a little bit about the kind of founding story. Were you just kind of bored in Shoreditch, or it was a eureka moment? You jumped out of your shower, your bathtub in some part of London or Slovenia. What like led the light bulb moment? What led to
I mean,
Flare?
it's. I think having been to Shoreditch a couple of times, I think it's fairly easy to be bored there. But no, we weren't.
Shit.
We.
It's full of bankers now.
Yeah, I
Well,
know. It is now. It is now.
yeah.
Yeah, but no, we set about really after UCL. We got together and we set about looking at, okay, we want to be in crypto. What do we want to do?
Mm,
And we really focused on, okay, where can we add value? And there's a couple of networks out there like Bitcoin and XRP that don't have smart contracts and aren't going to have smart contracts anytime soon. And
yeah.
we thought, well, okay, well, how about we build a really genuinely secure layer for these entities to have smart contracts? And in building that,
Mm,
we ended up building something much larger. So in order to basically interact with other smart contract networks, you need some form of protocol in order to understand what's happening on those smart contract networks. And that protocol is a data protocol, and Flare has two formal data protocols. So the first is called the Flare Time Series Oracle, which is a mechanism by which Flare achieves a consensus over pricing of assets. Could be assets in crypto, could be assets outside of crypto. And then its second protocol is called the Flare Data Connector, which allows Flare to essentially come to consensus over data from Web3. So the state of another blockchain, what has happened on another blockchain, essentially. Has Ronit sent Hugo 1 Bitcoin? Maybe one's a bit much these days. But then also allows to do the same thing over Web 2 APIs. So, if I have some form of like quasi-deterministic data in Web 2 that I'd like to be able to get onto a blockchain, it does that. And so Flare at its basis is a EVM layer 1 blockchain. So it runs the Ethereum virtual machine. So it runs smart contracts. And then it has enshrined into the chain itself these two data protocols. And the core aspect about these data protocols is that they are operated by the validators of the network, and they're operated collectively by the validators. So we need to have, substantial participation of the validators in order to come to consensus over these data types. So, unless we have 50%, more than 50% of the stake agreeing that a particular thing happened, then it is not agreed that happened on the network. And because the validators are staked, they have money at risk. This gives these data protocols a high degree of security, because obviously if you're not providing the proofs, or you're trying to be malicious, then you're undermining the value of the network, and in doing so, undermining the value of your stake. And this is a fundamental aspect of Flare compared to, say, other data protocols in the space, which is that Flare provides its pricing and its non-pricing data by consensus of essentially the majority of the stake. It applies the same ideas around staking as it applies to data provision. And this is broadly not the same on other data networks.
Sorry to ask these obvious question, or maybe I missed it in your answer if I'm not clever enough, but why do we need decentralized data? And is this a particular problem or not problem, but challenge or topic in crypto and the blockchain world, or is it just a general industry-wide issue?
I get asked this question a lot. It's like, well, why do you need data to be decentralized? Well, you have a fundamental problem when you're dealing with the blockchain, which is, how do you trust someone to put data onto the network when, in doing so, they have essentially the whip hand in any protocol that is relying on that data? So, give you a very simple example. If I can get liquidated, if I can liquidate someone by providing a piece of data, then I may be very financially incentivized to do so, and therefore you wish to decentralize that in order to give it the maximum possible robustness and safety, because it's very, very much harder if you have 100 entities that are all providing the data, and if they're providing that data and that data is wrong, that the value they've staked into the network essentially falls because the network is not providing the data that it should be providing. That is the value of decentralized data in the context of a blockchain. There are other values of decentralized data in the context of everything else we do. It's harder to conceptualize, but a good example is something like, proving that a particular photo is or isn't generated by a generative AI. That is probably fundamentally something that could only feasibly be done in a decentralized way, because you need to be able to get access to the data at all times. If you're running a program that needs to know whether this is or isn't a photo that is AI generated.
And how successful do you think we've been so far in the blockchain world when it comes to decentralized data? Do you think there are other ways of solving or tackling this problem?
I'm sure there are other ways. Every way you look at comes with its own downsides. So, we use ultimately we use a staked attestation model. This means there's money at risk, and we're basically making the trust judgment that with sufficient money at risk and sufficient number of parties, that the data is going to be correct. You could use things like zero knowledge proofs, but they're not infallible, especially when it comes to using a zero knowledge proof between two different blockchains. As a zero knowledge proof may not be able to distinguish which fork of a blockchain is in fact providing the data. A zero knowledge proof can simply provide you the proof that something happened on some system it is observing, but it cannot necessarily say that the system is in fact fundamentally the agreed version of Bitcoin that society agrees is Bitcoin. That sounds a little complex, but with all blockchains, you will have forks from time to time. And those forks are generally settled by, which is the longest chain. And, there's subjectivity around which fork of Bitcoin may in fact be the sort of collectively agreed fork of Bitcoin at any particular time. We've seen this when Bitcoin Cash and all those kind of things moved, to slightly different softwares. And so that, yes, there are different ways to do data. There's Chainlink, there's Pith. They all come with their downsides. For example, Chainlink is fundamentally much less, decentralized than other entities, including Flare, that are trying to go for a fully staked network-based approach. Pith does have some form of staking, as does Chainlink, but it's not widely used yet. Pith has some form of staking, but broadly, again, it's not hugely decentralized. Has not gotten there yet. So Flare has started from I suppose the starting blocks of being highly decentralized from day one. We have 100 validators, all of whom are staked, all of whom contribute to every piece of data that is being agreed on the network.
Hugo, when did you first get interested in the world of blockchains or crypto, or however you want to define it?
So I think it was at UCL when I was studying machine learning, and fundamentally when I realized that machine learning was basically a game that could only be played within vast organizations that have access to massive amounts of data. Hence, you see OpenAI having their partnership with Microsoft would not have been able to really progress with OpenAI if they had not had substantial partnerships with entities that could give them very, very, very large training sets. And therefore, as an entrepreneur that didn't want to go to a FANG or whatever, and in fact wanted to start something, machine learning at that time, and probably still to a large extent, was very, very much the preserve of large organizations, and did not look like it was feasible for a small person like me to go into and do something interesting. Additionally, I'd had a number of people talk to me about Bitcoin. I owned a little bit of Bitcoin, just because some traders in my circle were interested in it. Said it was the next big thing. I didn't make very much money on it because like if you're in finance, having a 10x return is huge, and you start to get worried about it, and you're like, well, I just made 10 times my money. I might as well take it off now. It's just sort of that doesn't naturally chime with the discipline of being long or short. So, but we got interested in it really from the theoretical perspective first. It's a very interesting area. It's a lot of game theory around how people interact with each other, how entities interact with each other, because each validator is effectively an entity. How you can bring this, as you started out earlier, saying Web3 has been very good at accumulating employees and founders from all around the world. So it's very interesting to go from relatively closed markets to something that is a free market, and a free market where all of the best and worst things of free markets can be seen.
Let's talk a little bit of the best things that you've seen. I mean, the worst things are maybe easy to itemize sometimes, given excesses of all new industries, and crypto is no different. But the best things, what are the best things you've seen? I mean, we touched upon, I guess, globality and talent from all over the world. What else has really kind of attracted and appealed to whether your heart or your brain?
There's a couple of things. I mean, fundamentally, the coordination of people to create a currency like Bitcoin.
Mm-hmm.
The first currency really that is not forced on you at the point of a gun or a tax demand. It's a very interesting experiment, and I think it's gone beyond an experiment at this point in global coordination. it very much chimes with, if you're interested in macroeconomics, like it's kind of macroeconomics to the nth degree. It's a very interesting free market, quasi free market, because there are a limited number of people that make ASIC chips, but it's a very interesting market in terms of participation, coordination, how Bitcoin gets updated, adoption, agreed value of an asset that has intrinsically zero value, across a large number of people. Of course, there's a speculative effect, but it's still, you can't deny that Bitcoin is in many ways totally revolutionary in terms of ultimately being the apotheosis of globalization as a tool. So it's from a fundamental, like almost philosophical perspective, it's a very interesting thing. Probably the next most interesting is something like stable coins. How do I lower the cost of using dollars, or primarily dollars, but there are euro stablecoins and yen stablecoins and things like that. How do I lower the cost of using these things? How do I do regulatory arbitrage? How do I do payments very, very much more cheaply than through an existing bank? I think they've been fundamentally, I think fundamentally the case for stablecoins like exists. And in fact, in so many ways, they're going to probably lead to CBDCs. And CBDCs, have a very high likelihood of disintermediating very large components of the payment and banking systems across the world, which I think is like fascinating. And stablecoins are almost the petri dish for that.
Stablecoins, absolutely fascinating. What I find fascinating about them is just how dollar-denominated stablecoins are, and I find it like, without like over-egging the point, but supremely ironic that part of, and it's okay, maybe the originals, and we've moved beyond it. We've moved beyond the original cypherpunk libertarian dream of this decentralized currency, but we've ended up with these stable coins that are tokenized dollars. 99% of them are dollars. And do you think this is still going to be the case in 5 or 10 years' time, or are we going to see a change there? There's something wrong with it being dollars. I just find it ironic that it's in the FX,
Well,
dollars are dominant, but it's not as dominant. Like in the sort of, you're in commodities, not FX, but in the, as you know, the stats, right? 88% of all FX trades have one leg in USD. In crypto, it's like 99% is tokenized.
so to address the cypherpunk point, I think
Yeah.
it's fundamentally, that allows you to say, okay, blockchains have value outside of anarchy,
Yeah.
right? They have value in doing things that are
Yeah.
not just not
Yeah.
just fundamentally opposed to the existing system.
Mm.
And I think that's an interesting point of what blockchains have done. But I
Yeah.
think probably if you look at the users of blockchains for stablecoins,
Yeah.
it's most likely in countries that either are very, very substantial dollar users anyway, like almost all of Southeast Asia, or countries where there have been failing currencies,
Mm.
like Argentina, Venezuela,
Mm.
those kind of places. So I'm not surprised to see the
Yeah.
dollar saturation. To be honest with you, I think it just reflects who's using blockchain, and I think around the world, the people that need dollars are using blockchain because it exists. And, frankly, euro payments, I'd say the saturation of blockchain in Europe, whilst there are a good number of users, I'd say it's substantially less than, the rest of the world. And the rest of the world needs dollars.
Yeah, yeah, it does. And it's it's also the case that in the digitally native part of the crypto world, um, in the trading environment, the pair is a tokenized dollar. So I get the Argentinian, I've got dollars under my, like literal dollars, banknotes under my mattress. And now I'm going to hold a tokenized dollar as well, or in Lebanon or in Nigeria, or Pakistan, where the currencies are weak. But it's kind of interesting that
Well,
even just
there was always a meme in
yeah,
blockchain, and there still is, of
yeah.
financial inclusion.
Mm,
Financial inclusion is essentially, allowing the global South to be included in the global financial system,
mm,
and the global South wants dollars. They don't want euros. They don't want yen. They don't really want renminbi.
mm.
And they certainly don't want rubles. So I think it just reflects, almost to an extent, the success of blockchain in its mission.
Yeah, yeah, yeah. Now, what's we've talked about some of the positives, you know, providing an alternative in the global south to weak currencies, global talent, some of the intellectual side. We've discussed that. What's maybe disappointed you in your blockchain journey? Think, by now I'd have thought this would have been built, or by now I thought this is how we would have worked. What's kind of
So I think a couple of things. I mean, obviously the rampant speculation on tokens that fundamentally are uh, not designed to have utility. So meme coins being the perfect example of tulips. You know that they're with the exclusion maybe of Dogecoin, which is I think fundamentally just a internet meme and an expression of the internet's and the coalescing of the internet and Bitcoin. There's been an explosion certainly in the last every time there's a bull market, there's an explosion of meme coins. And there's a speculative aspect, which is if I get into this meme coin first and it becomes popular, I'll make 1,000x. The existence of crypto and blockchain as fundamentally a casino is is one of the bad things of it, because it chews so many people up because there's huge information asymmetry in the market, and that's kind of sad. Uh, I think the bigger piece is something that rankles with us, which is the funding or fairly limited funding around crypto and the cycle of capital, which is a very short, bless you, um, the cycle of capital within crypto, which is quite often very short term based. And so that means products don't get built out, or they get built out cynically, meaning they'll make design choices that really don't give you safety, don't give you robustness, don't really end up with something that is, I would say, arguably, extremely valuable, both from a financial or utility perspective. And so the lack of the desire amongst the capital providers in the space to basically make the quickest return, combined with the kind of speculative aspect, has meant that crypto has very much suffered from not having, necessarily as disciplined teams and as I guess teams that are prepared to grind it out for as long as possible to get what they want,
yeah,
build what they want to build.
it's definitely a lot of, I guess, speed dating type behavior. Um, what's next? What's next for Hugo
Uh, I'm
or Flair or
I'm CEO of Flare Labs, and I'm chairman of the board of the Flare Foundation.
yeah,
Flare's shipping all of its products this year, basically. If we stick to timelines, hopefully. And that's a huge endeavor. As I said, we're a team now almost of 100 people, of which there's a very large ecosystem component. Uh, Starting a blockchain for data, which is what Flare fundamentally is a hard task technically, but it's also a hard task in terms of ecosystem development. You have to get people to use it, because Flare and the space is very DeFi focused. You have to bring in liquidity. You have to bring in liquidity partners. There's a huge amount of work still to be done, um, to see the Flare ecosystem into the right place. But we're also, as a team, looking at machine learning and AI, and where that coincides with blockchain. We have some pretty interesting papers and ideas around it. I think that there's fundamentally a particularly valuable thing to do in AI around essentially coming to consensus between different AI models in order to get a more robust answer, a more robust inference.
And if folks listening to this podcast, want to stay in touch with you or Flare Networks, what's the best way to do that?
Absolutely. So Flare Networks, at Flare Networks on Twitter is our main Twitter handle. And of course, I keep saying Twitter, but people call it x.com these days. I'm not sure why. But yeah, at Flare Networks, flare.network is our website. We have a Discord. We have multiple Telegram groups. Be careful, some of them are frauds. At Flare Networks is our Telegram group. Otherwise, yeah, reach out to me on Telegram or on Twitter.
Hugo, it's been a real pleasure to talk to you again, this time for our FUMO podcast. Your journey in machine learning, in the sort of frontiers of finance and technology that's taken you from London to Slovenia to Dubai and points beyond. Been a fascinating conversation. Hope we get to meet again in person soon, and have a great summer.
Thank you so much, and you.